Hello and welcome to another update video about MATIC. Polygon MATIC continues to be stuck in a sideways range, really just range bound. Nothing exciting going on here in this range at the moment. I've given my best to provide my best guess, and when I say it's a guess, it really is. At least I say so when I think it is. To provide my best guess on the bullish micro count here, because you see how messy it is, you know. Looks very weak, very weak. Looks very sad actually, that price structure here. I still keep the door open for higher, especially as long as this orange, not orange, this red line is holding there, which is the wave 2 low in the white count, 63.5 cents. That's the key level to hold, because if we break below that level, it indicates that we're heading down in yellow wave 5. Now, that would not necessarily be bearish, but honestly for the price, it would be good to avoid it. Just objectively looking at the chart, there's nothing that tells me the price wants to avoid it. Yep, it tries to avoid breaking down, but literally it's just moving sideways. So I did previously explore the idea of a triangle here. I never really showed it on this chart because of this swing high. But with the I mean, if this now forms a lower high, another higher low, then we could revive the idea of maybe an Elliott wave triangle here, that the wave 4 is still unfolding. But yeah, it could literally be anything. You know, sometimes people ask me, could it be this? Could it be that? It could be literally a lot of different stuff in this range, because it's just corrective up and down. So if you see back-to-back corrective price action, the microstructures are just noise typically. It's best to understand what's the range, what are the key range boundaries, what are the invalidation points up, what are the invalidation points down, and what do we need to see for bullish continuation or confirmation. So let's first of all start with that. So the white count is obviously the wave count in which the wave 2, this correction, which actually started already here in December, and the strong decline started in March actually, that this is the wave count, the roadmap that needs to be followed for me to say, yep, we have most likely bottomed there in this wave 2. But it takes a few, well, milestones, you know, to be reached. Basically what we have is, I want in this third wave, the price to reach like 88 cents. In the third wave, the 1.38 extension of the initial 1-2 setup. In the fifth wave, I want the 93 cents to be reached. So the 1.618 extension can always go higher, but important is that I get 5 waves. So if it arrives at the 1.618 extension, it only 3 waves. It doesn't give me a strong, let's say, opinion. I can't have a strong opinion that we've bottomed, but in 5 waves I can. So that's the problem here with this structure at the moment. It's just moving sideways. It's a bit of a hopium count, that white scenario. To maintain the white scenario's potential, it needs to hold above 63.5 cents. And we need a break above this last high at 77.8. Yeah, very important. Until then, we're just stuck in the range, and the yellow count is also decent potential, but needs a break below the red line at around 63.3 cents, as already said, to confirm it. If we get one more low, it's going to be the 58.3 cent level that, well, should offer support. Ideally, the price doesn't break below it, because then we get closer to the invalidation point. That's really the make or break point. I mean, technically, this overall bullish potential is valid as a 1-2 setup, as long as we're holding that 49 cent level, but it's getting less and less likely and reliable below the 58.3 cent level, which is the 78.6 fib level. So can't really say much more here until we get the 5-wave move to the upside, and then we can at least say, okay, wave 5-wave move, let's call that a wave 1. And I can tell you, however, that the risk, because of this diagonal pattern, the risk that we break down will stay with us for a while, because there's this other count, which is sort of looming in the background. Let me see if I find the long-term chart, which I showed you before. As channel members, you have access, silver and gold members, you have access to these long-term charts as well. It's the white count here. I mean, on the daily, weekly chart, I've got this triangle pattern. So that means that what we're dealing with, because the price is really not moving up in any impulsive way, it could be an A, B, C, D. And even if we start a rally from here, it could just be the E wave of a triangle, which means when we rally, don't break above the C wave high. There's a big risk this is just forming a triangle and we break down afterwards. So yes, you could say, okay, but if we're forming 5 waves, that's less reliable, right? That's less probable because the E wave has to be a 3-wave move of this triangle. Yes, but because we're dealing with a diagonal pattern to the upside, you can always confuse a 5-wave diagonal with a corrective rally. That's always a risk. So this potential will be with us for a while. Please be aware of that. Yeah. But yeah, that's at the moment what we're dealing with here. Don't like price action there at all. I have to say that. Doesn't give me a good feeling. But we're in a support region. It's not broken. There's no objective signal that we have that we're heading back to, let's say, new bear market lows until we break that support level. But this is where it needs to turn around, right? So yeah, I'll keep you updated. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.